Welcome to the Fear and Greed Business News Afternoon Report for Friday, the 3rd of May 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed up a little over 0.5% today to 7,629 points, led higher by some of the interest rate sensitive stocks, consumer discretionary, real estate and technology stocks. There wasn't a huge amount going on really. Wesfarmers and Goodman Group were among the best performers. Both Westpac and ANZ ended higher ahead of their half-year results next week. Aristocrat Leisure had a good day, while among the tech leaders, both REA and WiseTech Global closed up sharply. QBE, Transurban and Telstra were among the laggards. One stock that found a friend today was Star Entertainment. It finished 7% higher, coming off all-time lows earlier in the week. For the 5 days trading, the benchmark was up just over 0.5%. As we head into the weekend, the Aussie dollar has picked up a bit, fetching nearly 66 US cents. Story number 2, Macquarie Group's annual net profit fell 32% to $3.5 billion, lower than expected, as fewer asset sales and lower commodity prices hit the bottom line. Australia's 9th largest company also cut its dividend, with boss Shamara Wickramanayake saying while the business was resilient over the year, ongoing economic uncertainty and subdued market conditions had hurt. The fall in earnings came from the Commodities and Global Markets division and the asset management arm. The commodities fall, well, that just reflects lower commodity prices. The asset management arm suffered from lower realizations in green investments and higher spending in green energy portfolio companies, which I think means ESG investing didn't do as well as Macquarie had hoped. The banking and financial services business, along with capital markets operations, did better. Ms. Wickramanayake said the bank remained well positioned in the medium term, but she's taking a cautious stance on the outlook, given the current market conditions where interest rates are high and inflation is only subsiding slowly. Macquarie's share price closed down 2% today. Story number 3, US-based Block's $39 billion purchase of Afterpay 3 years ago is finally starting to pay dividends, with the payments systems company reporting a big jump in buy now, pay later transactions during the March quarter. Incorporating Afterpay into Block's Cash App, which allows people to transfer money via mobile device, has resulted in a 25% jump in Afterpay volumes and a 32% increase in gross profit. Block founder Jack Dorsey had the strategy in mind when he bought the Australian fintech, and the March quarter results triggered a 10% rise in Block's share price here on the ASX. Mr. Dorsey refuted media reports overnight that said the US prosecutors had met this year with former Block employees relating to alleged compliance failures at Cash App. He said it related to a previously disclosed investigation into matters Block had self-reported. Anyway, the bottom line there, Afterpay seems to be working for Block. Story number 4, protests at the University of Sydney by pro-Palestinian and pro-Israeli groups have wound down after tensions flared before lunch, with both groups shouting slogans and small groups from both sides facing off. The pro-Palestine rally was first to begin earlier this morning at the University of Sydney's pro-Palestine encampment, as the pro-Israeli contingent gathered on the other side of the campus block. Hundreds gathered at the university's iconic quadrangle festooned with banners, Palestinian flags, and chants of "From the river to the sea." Security personnel were spread throughout the campus. It all came after US President Joe Biden denounced violence and anti-Semitism on US campuses, saying he supported the right to peaceful dissent, but protesters had gone too far. And story number 5, Apple's share price jumped in late trading after the company posted stronger than expected sales in the March quarter and predicted a return to growth. Apple's share price has been a not so magnificent part of the big 7 tech stocks that have driven the market over the past year. Apple's share price is actually down about 7% this year, even after a jump following that earnings announcement. Revenue was down, but not by as much as forecast. Apple has actually posted sales declines in 5 of the past 6 quarters, hurt by a sluggish smartphone market and headwinds in China. Profit for the quarter was also better than projections, and the company announced a $110 billion share buyback. Massive. That's like buying all of Commonwealth Bank back, almost, anyway. That's it for the afternoon report for Friday, the 3rd of May, 2024. Michael Thompson, Adam Lang and I will be back tomorrow morning with the weekend edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.